Well, the latest batch of tech earnings coming on the heels of another strong day for the markets. The S&P jumping 2%, the Dow adding nearly 500 points, and the Nasdaq leading the charge, surging 2.7%. It's a third straight day that the tech-heavy index has posted a gain of more than 2%. It's only done that 4 times in history, most recently in April 2001. The Nasdaq now down less than 1% this month. So what will today's earnings do for the recent momentum that we've had? You alluded to it. It's good news, particularly ahead of all of the other big tech earnings that we're looking for next week.
Yeah, I think we could. This is a time, I think, to talk as much about just some of the technical dynamics of the market. I mean, we've had a 12.5% rally in the S&P off that intraday low on the 7th. It's pretty remarkable. Now, we're right up at the top end of a down channel that goes back to Feb 21 and for semis back to Jan 7th. So that's what's fascinating to me. I think if you look at the move that the market's had, and there's some arguments, and I'm reading some pretty interesting data out there, that a lot of the sell-off has been all about hedge fund repositioning and then CTAs following them. That you haven't heard retail sell. You haven't necessarily seen foreigners leave our markets. And those are 2 points that are either, that's really bullish, or it's actually very bearish because you haven't seen, the type of capitulation that you could see.
It's shocking that it's almost back to flat-ish. That's sort of amazing. This is so much worse, though, than flat or flat-ish or down slightly.
It's like staying flat.
Yes, yeah. That's way, way less treacherous than this.
Mm-hmm. I look at it, and 5,500. Steve's talked about this. I think we've collectively mentioned this is basically that 50% retracement of that low that we made, by the way, which was the bottom of a 4-year trend line, I think, from 2020 or so. So we held the trend line that we should have, the uptrend. Problem is, what we've seen here is just, I think, a textbook retracement. I don't think we're out of the woods yet, though, Melms.
So we're above the 20-day moving average, which is your momentum indicator. The 50-day moving average is 56.46. So that's the big one that we have to breach or cross over to the upside. Look at a long-term chart in the S&P. We've had collectively across this desk every crisis. This is going to be another one that the market shrugs off. And I think we're going to be at 6,000 pretty quickly.
Pretty quickly, like when?
4 months, 4 to 6 months. Is that quickly? I don't know. I don't know. Some people.
I thought you were going to say Thursday.
Yeah, not Thursday. Not Thursday.
Points.
Not Thursday, but
points.
yeah.
Okay, 4 to 6 months. All right.